Thank you so much for joining us this morning. I'm Emily Gabrault. I'm Deputy Chief of the Nonprofit Organizations Public Charities Division in the Attorney General's Office. With me this morning are Assistant Attorney General Leslie Bennett and Paralegal Alyssa Del Vecchio. We're so glad you could be with us here today as we continue our Navigating the Changing Nonprofit Landscape web series in the hopes of providing helpful information and resources to nonprofit organizations like your own as you navigate these challenging times. Today, we'll be talking about what to do if your organization is at a crossroads and thinking about making structural or operational changes. We know you are facing unprecedented times, and with that may come the need for your charitable organizations to consider unprecedented actions. If your charity is facing serious organizational or financial difficulties, for example, it may be time to consider doing things differently. It's important that you as officers or board members exercise your fiduciary duties in assessing your organization's options. By understanding what is fueling the need for change, you can assess the most appropriate next steps. For example, is your organization facing declining donations, rising costs, unsustainable operations, a loss of major funding, changing policies, or just trying to weather the general impact of the economy? Has this been happening for some time, or is it relatively recent? As you answer these questions, you might find yourself considering whether or not it is appropriate to make modifications to how your organization operates. Changes like spinning off activities that are not cost effective, cutting costs and reducing overhead, raising funds through a special fundraising campaign, or looking at alternative funding streams. In some circumstances, the threat might be more existential. You may be asking yourself, can my organization continue operating at all? Today, we hope to provide guidance and resources as you navigate answering these questions. We will start at the beginning with a brief look at options a charity has when it's starting out, then take a closer look at what's available when a charity may need to change its course as it navigates uncharted territory. And we'll conclude this morning by looking at how to wrap things up if you find yourself unable to continue operating. We'll be dropping links in the chat as we go so you can access online resources, and the slides from this morning's webinar, as well as a recording, will also be available on the division's resources for addressing a changing landscape page at the conclusion of this morning's webinar. Before we begin, please understand that the information shared today is not intended as legal advice, but rather information shared as a resource. It's always a good idea to consult an attorney who has experience with nonprofit organizations who can provide you specific assistance when you're considering these different options. If you need closed captioning this morning for today's webinar, you can turn that on directly in the Zoom here by clicking on the Show Captions button on the bottom of your browser. With that, I appreciate you joining us. We look forward to speaking with you, and I'll pass it over to Leslie, who will start us off.
Thanks, Emily. It's all too common that someone has a great idea to make a difference, and they create a charity with the intention of doing good work. What some find out is that good intention alone may not be enough when it comes to creating a successful, self-sustaining nonprofit organization. What is too often the case is that an organization is created and for whatever reason, it never manages to get off the ground. Some of the challenges include funding, managing volunteers or staff, and the legal obligations of local, state, and federal requirements. One alternative to creating an entirely new organization, which can be both expensive and time-consuming, is to enter into a fiscal sponsorship relationship with an already established 501c3 organization. That's an organization that for a fee, usually a percentage of the project's income, will provide the administrative infrastructure and take care of the legal and financial obligations that would enable the project to focus on its mission. This can be advantageous for a number of reasons. As a new effort, it takes time to build a reputation and gain credibility. Under a fiscal sponsor, you have support as you navigate the project's start. Given the uncertainty of the times we're in, you may be unsure of how successful this project actually will be. Fiscal sponsorship gives you time to assess whether there is support for it. The project can receive tax-deductible donations that are made to the fiscal sponsor, and there are administrative responsibilities such as accounting, payroll for staff, grant reporting, and legal obligations such as annual filings with the Attorney General's office and the IRS. And depending on the terms of the agreement, the fiscal sponsor will often handle those. If the project is successful and reaches the point where it has the resources it needs, both financial and governance, to be self-sustaining, the sponsored project and its sponsor can agree to terminate the relationship. And the sponsored project can take the steps necessary to become an independent nonprofit organization. If, on the other hand, the project is not successful, the fiscal sponsorship can end, keeping in mind that funds that were raised for its mission will need to be handled appropriately. That typically means redirecting them to similar charitable purposes, and legal counsel can provide helpful guidance in those situations. For charities that are established and holding assets, the changing landscape we are all facing may have your organization reevaluating whether it can continue to best use all of the resources it holds, or if some may be better administered by another organization. Next, I'll be talking about some of the options that are available for charities that need to consider alternatives given these challenging times. In Massachusetts, if an organization wants to transfer a large part of its assets to someone else to administer for less than fair market value, our law requires that a charity seek court approval before that transfer is made. The case that drives this practice is called Massachusetts Charitable Mechanic Association versus Bede. Some examples of when a Bede petition is appropriate are: a small, all-volunteer environmental organization receives a gift of a sizable piece of property that it doesn't have the resources to maintain. Rather than keep the property and stress its limited resources, it decides to give it to a preservation organization that is larger, has paid staff, and more funding to maintain it. Or a church has a very old building that has significant maintenance costs and is in need of significant repairs, but the church doesn't have the resources to make them. It decides to sell the building to another church for below fair market value because the buyer will continue to use the building as a worship space. The church selling the building continues to operate by renting space in a nearby location and saves money by reducing its overhead. Or the income of a charity focused on special education has been in decline for several years. The board decides that it would be better to transfer its intellectual property, materials, and the resources it's developed to a larger educational charity and to continue its mission by providing training for special education professionals. Or a small museum receives a gift of a large archive of historic memorabilia. After a few years, the museum realizes the collection isn't in keeping with the rest of the museum's contents, and it's become too great a burden to house, preserve, and maintain the archive. The board determines it would be better to give the archive to another charitable organization with a mission more in keeping with the archive's contents. To determine if a Bede petition is necessary, there are several questions that your organization should ask itself. First, are you a public charity? The definition of public charity is derived from case law. In brief, it's a nonprofit with a charitable purpose benefiting an indefinite number of people. In other words, not benefiting a defined or a particular group, like a group of homeowners or club members. Typically, an organization that is registered and files annual reports with the Division of Public Charities will be required to submit a Bede petition. But even if an organization is exempt from those registration and reporting requirements, like a church, it would still file a Bede petition because it meets the requirements of being a public charity. Second, is the recipient also a charity? Recall, this involves a transfer of charitable assets for no consideration or a sale for below market value, and only a charity can be the recipient in a Bede transaction. Third, does the transaction involve a large part of the charity's assets? There's little guidance on the definition of what a large part is, but notice should be provided if the transfer involves more than a de minimis amount of the charity's assets. If you're unsure, it's best to submit the circumstances in writing so the division can make a determination. Fourth, is your charity receiving less than fair value in exchange for the assets, such as making a gift of its property outright or selling for below market value? The division has issued written guidance on deed petitions, and we'll drop that link in the chat. Given the changing times, your organization may be facing difficulties that may cause you to consider whether it's appropriate to not only sell its property, but to change the nature of its activities as well. In that situation, Chapter 180, Section 8AC requires the charity to provide notice to the Attorney General and seek approval. That is commonly referred to as an 8A notice. Here, there are 3 threshold questions for an 8A notice. First, does the organization qualify as a public charity? That is, as I said, a nonprofit organization with a charitable purpose benefiting an indefinite number of people. And just like in a bead situation, both charities registered with the division and those that are not required to register and report, like churches, must submit an 8A notice. Second, does it involve all or substantially all of the charity's assets? The division expects to receive an 8A notice if 75% or more of a public charity's assets are being disposed of. If you're not sure, again, the division recommends that the charity submit in writing a description of the transaction so we can make a determination about whether an 8A notice is required or whether there are other factors that would require court approval. And third, will there be a material change in the nature of activities conducted by the charity? A material change can be a dissolution. That is, when a charity closes down and dissolves, or a change in what the organization does. If, for example, a school is proposing to sell its building and put those proceeds into continuing its educational programming, that would not be considered a material change, and an 8A notice would not be required. An 8A notice would be required, however, when, for example, a college sees declining enrollment over several years, and the board realizes that it's not sustainable to keep the school open and decides to sell the campus, pay off its debt, and wind up its operations. Or demographic shifts result in fewer children attending a neighborhood daycare center. The board decides to sell the building and become a grant maker rather than a daycare provider. Or a struggling ambulance company loses its license and the board determines that it should sell its building and equipment to an ambulance company in a neighboring town and stop operating. The 8A notice, which must be provided at least 30 days before the close of the transaction, is intended to give the division an understanding of what is happening with the charitable assets and why. To help us most efficiently review the proposed transfer, we ask you to provide what is known as the 5 Ps. First, the process. Under the statute, the transaction must be authorized by a vote of 2/3 of the members or directors entitled to vote. It must provide adequate notice and maintain records of the process, such as minutes and votes taken at the meeting of the board of directors or members. In addition, it's helpful to provide information on the process the charity used to market the property and locate the buyer. Second, a full description of the property, including its location, how and when it was obtained, and whether there are any restrictions on it. A copy of the deed is usually attached. Third, price. It's necessary to show that the sale price is for fair market value. An independent appraisal is often submitted for this purpose. If one is not included, the division will ask how the organization knows the purchase price is fair market value, and if not, explain why the charity is taking less. If it's being sold for substantially less, as I mentioned earlier, it may be necessary for the charity to submit a bid petition and seek court approval. Fourth, a description of the purchaser. It's preferred that this not be a related party transaction. There are questions about conflicts of interest if a board member, officer, director, senior manager, or a family member of any of those purchase a charity's property. The question is whether the buyer may be inappropriately benefiting and taking advantage of the charity, or perhaps they're being given a unique opportunity by virtue of their relationship with the charity. We look at those kinds of transactions very carefully and ask for full disclosure of the relationship between the buyer and the charity. And finally, the proceeds. The charity must provide details on how it intends to use them, keeping in mind that there must be a material change in the nature of the charity's activities. This often happens when a charity is dissolving, but as I mentioned, an 8A notice is required in other situations as well. Another option for when an organization is facing challenges is to consider looking outside of itself for possible solutions. For example, an organization that finds itself unable to fulfill its obligations may want to consider joining with a similarly missioned charitable organization in a merger, consolidation, or affiliation. Or a Massachusetts charity may choose to affiliate with an out-of-state charitable entity and look for the out-of-state entity to have control. Often, this is accomplished not through a merger, but by the out-of-state entity becoming the sole corporate member of the Chapter 180 corporation. This type of member substitution, where the control is now out of state, but is still with a charitable operator, is permissible as long as the charitable missions are aligned and the assets at the Massachusetts charity continue to be used for their charitable purposes. In these circumstances, we would ask your organization to notify our office of the proposed affiliation or member substitution, and we'd look to review the language surrounding the affiliation to ensure that the charitable assets in Massachusetts continue to be used for their original charitable purposes. If your organization is looking to merge entirely with another charitable entity, it must do so pursuant to Chapter 180, Section 10. As that statute requires, the organizations need to create a merger or consolidation document that contains the names of the charities looking to merge, the name of the resulting entity, its purposes, the effective date, and the terms and conditions. That is signed by an authorized officer of each corporation. And in the case of a charitable organization with members, at least 2/3 of them must vote to approve the merger. Some things to look out for in a merger. The organizations should be sure they are in compliance with their reporting requirements to the division. That means an annual PC form and, depending on the income amount, a review or audit, and 990. A merger or consolidation involving a Massachusetts nonprofit always results in a Massachusetts entity, even if the other entity is incorporated in another state. As the saying goes, once a Massachusetts charity, always a Massachusetts charity. It's important to keep in mind the source of the merging entity's financial support. If, for example, they raised significant funds from their local communities and will be relocating to a different geographical location, it would be appropriate to address that change. And court approval may be required to move those assets or use them for a different purpose. Similarly, restrictions on assets held by either charity involved in the merger must remain with those assets. For example, a fund dedicated to scholarships held by a school must continue to be used to provide scholarships. It would not be appropriate to remove those restrictions and use those funds for operating expenses or other purposes without seeking court approval first. If an organization owns property and merges into another, but is not the resulting entity, the resulting entity will need to file articles of organization or a merger document with each of the registries of deeds in which property is owned by the entity. Failing to record the accurate name of the mortgage holder or owner could be problematic if the property is later transferred or sold. Finally, the organization will file the merger documents with the Secretary of the Commonwealth and within 30 days with the Division of Public Charities, so we can make the necessary changes to our records.
Thanks, Leslie. We know that organizations that are struggling may not always have the option to restructure, and for some, they may have to make the difficult decision to wind down operations altogether. I'm going to pass it over to Alyssa, who will walk us through what a charity needs to do if it's time to wind up its operations. Alyssa?
Thanks, Emily. In the unfortunate instance that your charity is unable to continue operating, some charities decide that it's in the best interest to dissolve the entity entirely. The dissolution process starts here at the division. All charities that are winding up their activities need to be in touch with our office in one way or the other. The most common scenario is when a charitable corporation, a Chapter 180 organization, decides to dissolve. This would include any charity registered and filing annually with our office, as well as charitable organizations that are exempt from registering and filing with our office, like churches or mosques. In addition, charitable unincorporated associations and charitable trusts must notify our office if they're of their winding down operations. Some entities that would not dissolve with us would include non-charitable, nonprofit organizations like social clubs, homeowners associations, or lobbying organizations. Before filing for dissolution or notifying our Office of Trust termination, the dissolving entity should be registered and in compliance with our office up until the previous fiscal year. For example, a charity filing for dissolution on September 9, 2025, with a fiscal year-end date of December 31st, would need to have submitted Form PCs for the 2024, 2023, 2022, and 2021 fiscal year. This would still be the case even if the charity ceased all operations in 2023. If a charitable entity is not in compliance prior to filing for dissolution, the dissolution package will be rejected and sent back. If you have questions about your charity's compliance status prior to filing for dissolution, please feel free to contact our office at dissolutions@mass.gov. Once the entity is in compliance, we recommend reading the guidance on our website regarding how to dissolve an entity. The division has written guidance on dissolving a charitable entity, and we'll drop that link in the chat. There are two different types of dissolutions: a with asset or judicial dissolution, or a no asset or administrative dissolution. Assets are, but not limited to, money, intellectual property, real estate, or any other physical assets of value. I will walk through the process of filing both types of dissolutions in turn. If your charity has no remaining assets, then pursuing an administrative dissolution with the division would be an appropriate wind down of the entity. It's important to note that a charitable corporation may not render itself assetless in order to administratively dissolve. So, in other words, a charitable corporation should not transfer assets to another entity in an effort to get their bank accounts to zero in order to administratively dissolve. Administrative dissolutions can only be processed for organizations that have no remaining assets after conducting their ordinary course of business. A lot of confusion can arise around what in the ordinary course of business entails. Some examples of this would be: a scholarship entity has a pronounced history of providing $10,000 in scholarships to a local high school, and in their final year before dissolving, they give the remaining $10,000 to continue its historical practices. Another example would be a women's organization using its remaining $5,000 to host a course on the history of misogyny prior to dissolving. Or another example could be an artist organization using its remaining $2,000 to hire legal counsel or pay CPA fees to aid in the organization's dissolution process. Some examples of what we would not consider to be in the ordinary course of business would be a private family foundation with a history of providing a total of $10,000 in grants to other nonprofits gives the remaining $70,000 to one nonprofit prior to dissolving. A temple donates their remaining $100,000 to a children's organization when it has never previously done so. And lastly, an organization geared towards helping the elderly donates the remaining $20,000 split between 5 different health-related organizations, or even a charity decides to give its executive director all of its remaining funds as a bonus. Of course, this isn't an exhaustive list of every possible scenario, so if you have questions, a call or email to our office can help you conduct an appropriate plan for dissolution. Once an entity has used its remaining assets within the ordinary course of business and decides to administratively dissolve with our division, there are 4 documents that we require for our review. The first document is the Administrative Dissolution Petition. This document tells us about your charity and lets our office know why you're filing for dissolution. This document doesn't need to be filled out by an attorney and can be filled out by any officer, though some charities can opt for counsel to do this for them. The second is the officer's certificate. This document records how and when the entity voted to dissolve. Upon submission, please take care to ensure that the vote to dissolve the entity was taken within 365 days of filing for dissolution. If the dissolution vote was taken more than 365 days prior to the submission, the board will need to reconvene to reaffirm the vote. If the board voted via unanimous written consent, you don't need to include that document in the dissolution package. The third document is a Form PCF. This document is a shortened version of a Form PC, and instead of filling it out on our charity filing portal, this is a PDF submission included with the dissolution package that covers the stub fiscal year. A stub year is the time between the ending of the previous fiscal year and the point of filing for dissolution. For example, a charity with a fiscal year end of December 31st files for dissolution on May 4th, 2026. Their Form PCF would cover the financial information from January 1st, 2026 until May 4th, 2026. This is still the case even if the entity ceased all operations in 2025, or maybe even earlier, and had no financial activity in 2026. It's also important to note that a Form PCF should never include more than one fiscal year, and it doesn't replace a Form PC. In other words, we don't accept 4 Form PCFs to replace annual reports with our office. The fourth document is the dissolution worksheet. This document is a financial summary of the organization's previous 4 fiscal years. We cross-check this information with what's reported to us on the Form PCs, so please make sure that the information is correct and the calculations add up. If the entity is reporting capital gains or losses or unrealized gains or losses, those should be reported in parentheses in the gross support and revenue line or expenses line. Our division has copies of all these documents publicly available on our website to help streamline this process. Once these documents have been completed, you can email the PDF documents to dissolutions@mass.gov for review. If there are any issues with compliance status or any of the documents, the package will be sent back with notes on what needs to be completed. If everything has been completed with no errors, our dissolutions team will confirm that the package has been accepted and the dissolution review has started. Please be on the lookout for further communication from our office via email. The administrative dissolution review can be an iterative process and frequently requires additional explanation from the charity's representatives that may include the history of the organization, use of charitable assets, and any related party transactions. It is important to note, and this will be touched upon later in the webinar, that if the organization has any debts, we can't dissolve the charitable entity unless the debt has been forgiven, satisfied, or resolved. If your organization is a church, mosque, temple, or other place of worship that has been exempt from registering and filing with our office, we only require an administrative petition, officer certificate, and a 3-year financial summary, also known as a dissolution worksheet, to file for dissolution. These religious entities do not need to file a Form PCF, nor do they need to be in compliance with our office's filing requirements, as they are exempt. Religious entities dissolving should also not transfer any assets prior to an administrative dissolution. Please note, however, that charitable corporations that are religiously affiliated but are not places of worship would likely not be exempt and would need to be in compliance and follow the full dissolution process and include the Form PCF. If the charitable entity that you represent is not a corporation, the dissolution process will look slightly different. For charitable trusts, the termination process will differ even more than corporations or religious entities. While corporations and religious entities should have no assets prior to dissolving, any trust that holds under $200,000 may be considered economic and thus can terminate on those grounds. A trust can also transfer funds prior to terminating, so long as it follows terms outlined in its instrument. To terminate, our office only requires that the entity is in compliance, submits a Form PCF, and submits a copy of the trust instrument for our review. If you are representing a charitable unincorporated association, we will need notice of the charity's wind down activities through a submission of a Form PCF. This entity should also be in compliance with our office prior to this submission. Please note that transfers of any remaining assets should be approved by the courts through a bead petition, as mentioned in Leslie's part of the webinar. As I mentioned before, if the entity has remaining assets, it should not transfer those assets in an effort to administratively dissolve. Only the courts can authorize the transfer of assets prior to dissolution, and so charities will need to hire outside counsel to dissolve as a charity with assets in the Supreme Judicial Court, also known as the SJC. When considering who should receive the assets following the dissolution petition, organizations need to propose another charity that can use the assets in a way that is as near as possible to how the original charity used them. For example, a closing animal shelter could propose to the court that other animal welfare organizations receive the funds, but the court would not authorize the shelter's funds to be transferred to the local parent-teacher organization, for example. Once the charity has determined an appropriate recipient and has confirmed its compliance status with our office, there are 7 documents that you'll need to submit. First is the voluntary dissolution complaint. This document explains what the charity did, why it's dissolving, the procedure it used to authorize the dissolution, whether all funds were used to support the organization's mission, the assets remaining for transfer and any restrictions on their use, the name of the entity or entities receiving the assets, and why it's appropriate to receive those assets. The second is the officer certificate that authorizes the transfer and dissolution. The next is a motion for interlocutory order signed by the charity's attorney. Also, an interlocutory order for the judge that authorizes the charity to transfer its property. The next document is a certificate of service that serves to notify the parties when the complaint is filed with the Supreme Judicial Court. The next is a Form PCF for our internal records that covers the time between the previous fiscal year and the time until dissolution. Please note that it's sometimes the case where the entity may need to file a full Form PC even if the fiscal year has not yet ended. And lastly, a dissolution worksheet. This should be included in the submission to our office using the information from the last 4 Form PCF. Please take care here to ensure the math adds up and figures accurately represent the organization's finances. As mentioned previously, all of these documents are available on our website. Now, After these documents are completed, the initial filing should be sent to our office to dissolutions@mass.gov to review and assent to. The with asset dissolution process is also an iterative process between our office and the plaintiff, so please be on the lookout for further correspondence from the division. After our office assents, the charity's attorney must submit the complaint, officer's certificate, motion for interlocutory order, and certificate of service to the SJC and wait for the judge to sign the interlocutory order. Once you've received the signed interlocutory order, then you may transfer the charity's assets to the recipients. The Form PCF and dissolution worksheet don't need to be sent to the courts, as it's just for the division's internal records. After the interlocutory order is signed and the transfer of assets is made, the charity must submit 2 affidavits and some related filings to the division for review. The first is the affidavit of compliance, which is the document signed by the charity transferring assets, documenting what was transferred and when. And the second is the affidavit of receipt, the document signed by the receiving entity and submitted as proof that the documents were received. In addition, the division will need a motion for entry of judgment signed by the charity's counsel, a judgment for the court that articulates that the transfer was made in accordance with the interlocutory order, and lastly, the certificate of service. After a review, the Attorney General provides assent, and the charity submits those to the Supreme Judicial Court. As you can imagine, our division sees a vast number of dissolutions every year, and with that, we see some common mistakes or issues made on the documents that can further delay the process. One of the most prevalent are typos. Before submitting, please just take a few extra minutes to make sure that on all complaints submitted to the division for approval, the Attorney General's full name is spelled out, the current full name of the charity is included on all the dissolution materials, and all documents have been spell checked and proofread for any mistakes or inconsistencies. Mathematical inconsistencies are also extremely common on the dissolution worksheet and Form PCF. All figures should mathematically add up. The beginning year balance should match the previous year's end balance, and all of the organization's financial assets should be accounted for. As I've mentioned multiple times throughout the webinar, charities should not transfer funds out of the ordinary course of business. During the dissolution review, our division reviews expenses and transfers that the charity may deem as in the ordinary course, and reviewing if the recipient of those funds is appropriate. A couple of examples of an inappropriate transfer would be a soccer booster club uses its remaining $8,000 to gift to the remaining members' families via Venmo. Or an engineering research group pays its president to fix their equipment to sell prior to dissolution. The president then buys the equipment for his own personal use. Because the documents are publicly available, sometimes we've seen non-attorneys submitting the with asset dissolution documents to our office. Just to reiterate this, only the charity's counsel can file these court documents. Administrative dissolution documents can be filled out by board members or officers. Counsel isn't needed for those documents, but some charities find it helpful to hire attorneys to aid them in the process. Another mistake we commonly see with judicial dissolutions is that after receiving the interlocutory order, organizations don't transfer the assets and complete the process, thus leading some dissolutions to take months or even years to complete. After you received the signed interlocutory order from the Supreme Judicial Court, you should transfer the assets to the receiving entity. It's no secret that mail gets lost and emails bounce. So if you have heard from our office regarding whether or not the dissolution package was accepted, please feel free to follow up with our division. However, please note that we only accept dissolution materials via email at dissolutions@mass.gov or by mail-in submission. Checking the box on the most recent Form PC that says, please check if final return prior to dissolution doesn't count as filing a Form PCF, nor does it bypass the requirement for the aforementioned dissolution processes. We understand that this process can be difficult at times, so in either dissolution case, charities can opt to hire a legal counsel to aid you in this and speak to our office on your charity's behalf. If your dissolving charity does not have enough funds available for legal counsel, please know that there are legal resources available for those that need them. It's important to note that the Attorney General cannot approve a dissolution for a nonprofit organization that has significant debt. Some nonprofits may elect to resolve that debt through a bankruptcy proceeding under Chapter 11 of the Bankruptcy Code, where the debtor is allowed to continue its operations and file a plan to either reorganize or liquidate its assets, or Chapter 7, where the bankruptcy court will appoint a trustee to sell all of the assets and distribute the proceeds to the creditors. There are two major advantages nonprofits have in bankruptcy. One is that the creditors cannot put a nonprofit into a bankruptcy proceeding involuntarily. The second is that once a nonprofit is in bankruptcy, a Chapter 11 reorganization cannot be turned into a Chapter 7 liquidation without the debtor agreeing to it. A charitable entity cannot be dissolved through bankruptcy court, and that jurisdiction lies with the Supreme Judicial Court through a judicial or with asset dissolution, or through the division through an administrative dissolution. So once the bankruptcy proceedings have resolved the organization step, the nonprofit must pursue one of the dissolution pathways we discussed earlier.
Thank you, Alyssa. We know that that's a lot to digest, and we'll be sure to make sure that these slides are available for you after the presentation, as well as a recording of today's session. For now, we'll turn to some more specific questions that reflect what so many of you have asked us about. To start, a question for you, Alyssa. My nonprofit organization has been around for a long time, but we never registered and didn't submit annual reports. Now we need to dissolve. What do we have to do?
Well, first, you will need to register the organization on the charities portal and file the last 4 years of PC forms and any financial reports that required by the organization's gross support and revenue amounts. The division's website has instructions, videos, and frequently asked questions to help you register the organization and submit these annual filings. We can drop that in the chat. For charities with no assets remaining, there is an administrative dissolution process. For charities with assets, a complaint will be needed and you will need to be filed with the Supreme Judicial Court. As I mentioned, there's a step-by-step guidance on the division's website.
Thanks, Alyssa. Another question, what is the processing time for dissolutions? How long does it take to complete the dissolution process?
By and large, the timing of the administrative dissolution process can vary. I've seen it take anywhere between 2 weeks or up to years at a time. It can vary depending on a multitude of different things, but to ensure that the process is progressing as quickly as possible, responding timely, keeping all information contained in a singular email thread, and providing only necessary information is a great way to ensure that there are no unnecessary delays with the administrative dissolution process. Judicial dissolutions depend upon the court, so once the documents are submitted, it's out of our hands. But there are things you can do, like making sure the dissolving charity and the recipient are in compliance with their reporting requirements, that the complaint and all of the attachments are included in the dissolution package, and the financials are clear as to what remains. That'll go a long way to making the process go faster.
Thanks, Alyssa. Leslie, we've heard from some organizations that these changing times are causing them to question whether they can continue to achieve their missions. What options do these organizations have if they're asking themselves these type of questions?
Well, first, it's great that you're looking at your organization and evaluating whether or not you're still able to meet your mission. You can start to consider what's next by asking a few basic questions like, is there a way we could reorganize our activities that would help us to continue, perhaps by streamlining or becoming more efficient? Do we have assets or operational experience that could be used by a different, perhaps a bigger or better funded organization? Can we explore partnership or merger with another entity that's serving the same goals we are? If these restructuring pathways aren't an option and it looks like the entity should dissolve, you should learn more about the dissolution process that Alyssa reviewed. There is helpful step-by-step guidance on the Attorney General's Public Charities Division website page.
Thanks, Leslie. Following on that thread, if a nonprofit is winding down but still has funds available, what kind of restrictions attach to those funds? What should happen in the wind down and what kind of forms are needed? Alyssa?
So, as I mentioned, a dissolution of a charity that still has assets will need to follow a judicial process. The organization will need an attorney to file a complaint with the Supreme Judicial Court, and it must be in compliance with its reporting requirements with the division. The specifics about what happens to the restricted funds requires a case-by-case analysis. But by submitting draft documents to our team, we can work on that piece with your attorney directly. Broadly speaking, if the charity holds any restricted funds, those restrictions will need to follow the assets when they're transferred. Ultimately, it's up to the court to authorize the disposition of any remaining funds. For more specific information about what this process looks like, we recommend visiting our website where you can find sample materials.
Thanks, Alyssa. Leslie, we know that many organizations are hitting hard financial times right now. What kind of financial resources are available to charities that are struggling?
We know that so many organizations are asking themselves this question right now, and it's very important that officers and board members pay close attention to the organization's financial resources. While the Attorney General can't provide guidance on how a particular charity should address its individual cash flow problems, there are organizations like Massachusetts Nonprofit Network and National Council for Nonprofits that may be helpful places to start.
What about funders? What can a funder do to support nonprofit organizations that are facing challenging times?
As a grantor, there are several options you can consider to help your grantees. First, you could reach out to them directly to find out what their most pressing needs are. You could, for example, offer emergency grants or low-interest loans, increase the amount of general operating or unrestricted support you provide, increase the percentage you pay out annually, or increase the amounts of the grants that you give. You could make available resources like technology, training, or consultants that could help the charity with fundraising or strategic planning. You could help them diversify their revenue, encourage partnerships or alliances, and provide opportunities for grantees to come together and share resources. You also might consider the challenges that charities are facing when you evaluate their performance at the end of the grant term, and recognize that their performance may be affected by the times we're in. And you could also reach out to similar funders to find out what kind of changes they're making.
Thanks, Leslie. What if an organization finds that its board of directors is experiencing some internal conflict or turmoil? Perhaps there are even some resignations and no one is stepping in to help. What should that kind of an organization do?
Internal conflicts can be difficult to manage on a board. It's also challenging when people walk away from their responsibilities. It may be helpful to remind board members of their fiduciary duties, in particular the duties of care and loyalty that require them to act in the best interest of the organization. The Attorney General's Board Members Guide for Charitable Organizations provides some practical information on how board members can be more effective. You can access that guidance on the division's Resources for a Changing Landscape page. In addition, the organization may benefit from working with an attorney who specializes in nonprofits to ensure the board members have the support they need to fulfill the organization's mission and manage its charitable assets appropriately.
Thanks, Leslie. Alyssa, here's another question about dissolution. If our organization hasn't been active for many years, do we even need to dissolve?
So it's imperative that the officers or board members exercise their fiduciary obligations and work to dissolve a charitable organization that's no longer active. Oversight to ensure a charitable organization winds up its activities appropriately is just as important as making sure the organization ran well when it was operating. It's part of an officer, director, or board member's fiduciary duty to wrap up the charity's activities following the legal requirements. We're here to be a partner in this process and encourage you to visit our website for more guidance about how to dissolve.
Alyssa, sometimes we hear from organizations that think they already are dissolved. What does it mean if the Secretary of the Commonwealth's office dissolves or deactivates a nonprofit? Is that the same thing as dissolving with the Attorney General's office?
That's a great question. If you look on the Secretary of the Commonwealth's business lookup, and you notice that your charity says it was involuntarily dissolved by court order or SOC, this does not mean that the charity has been legally dissolved. The language around this can be confusing, but essentially what this means is that the charity has not filed its annual reports with the Secretary of the Commonwealth in quite some time. The Secretary of the Commonwealth and the Attorney General's office are two separate entities with separate filing requirements. Even if the SOC says the charity has been involuntarily dissolved, you will still need to formally dissolve through our office or the Supreme Judicial Court.
Thanks. In that case, how will charities know once they've formally legally been dissolved?
For administrative dissolutions, legally dissolved charities will receive a final notice, a copy of the signed petition, and a judgment letter sent via email. We don't mail out these documents, so be on the lookout for an email with the subject line, the dissolution of, trust termination receipt, or acknowledgement letter. For judicial dissolutions, you'll receive a final order from the court.
Alyssa, another question we hear from time to time is, how do we know if we are a corporation, a trust, or an unincorporated association? Can you provide any guidance?
Absolutely. The first place to start is by looking at your governing documents. These may be an instrument of trust, articles of incorporation, organization, or bylaws. If you don't have access to those documents or are new to the organization and don't know where to look, there are generally a few avenues that can be taken to determine if it's a corporation, trust, or unincorporated association. A charitable corporation will be visible on the aforementioned Secretary of the Commonwealth's business lookup and will have articles of organization publicly available. A trust will not be registered with the SOC and will instead have a trust instrument. Similarly, an unincorporated association would not be visible on the Secretary of the Commonwealth's business lookup, but would have articles of association. Most of these charity registration documents are also publicly available on our public charities filing search.
Thanks, Alyssa. Leslie, this question is for you. We're a church that's trying to hold a vote in order to comply with the legal voting requirements to authorize the sale of our property and dissolve. But we don't know if we can meet the requirements because many of our members no longer attend and we don't know how to reach them. What do we do in that circumstance?
Chapter 180, Section 8A requires at least 2/3 of those entitled to vote to approve the sale of all or substantially all of a charity's assets and change the nature of its activities. This can be done in a number of different ways, by mail, in person, or by other means. So as long as it's permitted by the organization's bylaws. If you don't know what the requirements are for your organization, it would be helpful to consult a nonprofit attorney who can assist.
Alyssa, another common question we get is, what if a charity is organized in a different state but operates out of Massachusetts? Should they still dissolve through the Massachusetts Attorney General's office?
So all charities that are organized in Massachusetts will need to dissolve with our office. However, if a charity is organized in a different state, but is operating in Massachusetts or holds a Massachusetts address, it would not dissolve through the Mass Attorney General's office. It would dissolve through the state that it's organized and submit a letter of withdrawal to our office. This letter notifies our office that you'll no longer be reporting with us, and this can be sent to dissolutions@mass.gov.
Thanks, Alyssa. We often get questions from religious organizations that sound like this. I'm on the board of a religious organization that doesn't have to register or file with your office. Do we follow the same process as other charities to dissolve? Do we even need to be in contact with you?
Yes, as I mentioned, all public charities must either be dissolved through an administrative process if there are no funds left, or through the Supreme Judicial Court, even if it's a church or a religious organization. The difference is the organization doesn't have to submit a PCF form since it's not required to report to the Attorney General, but it will need to provide the information like any other charity, a 3-year financial report, and an officer's certificate. The division will review its financial activity to ensure any assets are being handled appropriately.
Thanks, Alyssa. I think we have time for one more question. So Leslie, a question for you. What if my organization is struggling financially and has endowment funds that we need to tap into? What kind of guidance can you give us about use of those funds?
That's a perfect question for our next webinar scheduled for October 21st at 11 a.m. That will cover recommendations regarding modifications of restricted funds. In addition, the division recently issued guidance on that subject. You can register for that webinar or access the guidance on our resources for addressing a changing landscape page. And we'll drop that in the chat.
Thank you so much, Leslie and Alyssa. It looks like that's all we have time for today. Thank you all for joining us for our second installment of this webinar series. In addition to the next webinar on endowment fund modifications that's going to be held on October 21st, which Leslie just previewed, we also have another webinar scheduled for November 18th at 11 a.m., which focuses on support for smaller volunteer-led charities. A recording of today's webinar, as well as a recording of the webinar that took place in August. These slides and any future recordings of webinars and slides from future events will be available on our division's website on the Resources for Addressing a Changing Landscape page. Please note that you can also find contact information for our division there. It is our goal to be your partner during times of change. And we encourage you to please reach out to our team in the Charities Division if you have any questions. Thank you again for your time this morning. We hope you'll join us again in October, and we look forward to working with you as you figure out the best pathway forward for your organization.